Are we too obsessed with credit scores this week on the Extreme Personal Finance Show? Hey everyone, my name is Chris. Welcome to episode 43 of the Extreme Personal Finance Show. My friend Dan, how you doing, man?
Doing well, doing well. I moved locations a little bit so it wouldn't be so dark. And now I feel kind of like the Statue of Liberty with my little crown coming around here.
Little bit. No, but it looks good. It looks good. And I got to call out your taco eating dinosaur shirt because it's
Dinosaur Hawaiian shirt,
pretty
because
rad.
that's where they live, right? Hawaii.
I love it.
Yeah,
I love it.
right on.
By the way, have you seen the trailer for the new Jurassic World with Scarlett
Scarlett
Johansson?
Johansson. I did.
These dinosaurs were too dangerous for the original park.
Please don't say they're raptors. They're raptors.
The worst of the worst were left here.
I was both excited and was shaking my head like, oh God, not another one.
But this is kind of a relaunch of like a new trilogy, I guess. I don't know.
Well,
That's
it's
what
like a relaunch.
yeah, it's a relaunch. And
Yeah,
it's more,
because
it, it has more horror vibes, I think.
oh, I didn't get that. I'll have to watch it again and see.
Okay. I mean, that's kind of what I
Um,
got out of it, but I don't know.
Sure. It could be. That would actually make it more interesting to me.
Okay.
I'd be down with that. But
Why
I
not?
feel like the second trilogy had enough callbacks to the first one that it didn't feel like a complete like a reboot. Like this is a
Mhm.
different world because they kept referring back to John Hammond and this island and that and whatnot. So it's like, all right, it's just kind of a continuation, but
Yeah. So one thing I was going to talk about too was the crazy pricing on things. So I don't know. I don't think we talked about it last week, but like while I was in Florida a couple weeks ago, they announced just this once in a lifetime opportunity to see the original members of Black Sabbath reunited. And it's called Back to the Beginning, and it's the final show in Birmingham, UK at Villa Park. And it has the not only the original Black Sabbath lineup, but it also has Metallica, Slayer, Pantera, Gojira, Hailstorm, Anthrax, Mastodon. They also added Guns N' Roses and Tool to the bill as well. And so here's the thing. I tried to get artist presale tickets. I tried to get Live Nation presale tickets and then general presale on Friday. It was insane. Like you couldn't like the general presale, for instance, I got in the queue. There were 16,000 people ahead of me. I waited an hour. Once I was in, there was no tickets. There was no blue dots. There was there was nothing there was nothing to select. It was like, what is happening? And the artist presale, every time you clicked on it, it was like this ticket's no longer available. Like every single time you clicked on a ticket, it was just
wow.
impossible. And I saw on Saturday people already listing a ticket on eBay for $19,000. So that's what I just wanted to share.
I
19
wonder,
grand.
I wonder if that's a business model where they're like, all right, we're going to spend, you know, $15,000 on computers and networking equipment and, the fastest internet possible just to regularly buy
Yeah.
tickets as fast as they can to relist them.
I need to, I don't know, like a friend of mine jokingly commented, I need to, create my own bot to buy my tickets. Actually, funny story. I know we'll get to our subject today, but this is a funny story. So I buy a lot of tickets on Ticketmaster and they are the devil. Um, but here's the thing. There was a time when if I was on my home network, I could not access Ticketmaster anymore because my external facing IP, they blocked me because they said I was a bot. And so I contacted them. There's nothing they could do. I had to call my ISP and I told them, yeah, can you rotate that IP on my router that's coming into my house because I could not buy tickets. Ticketmaster banned me.
Wow.
I know. Ain't that crazy?
That is crazy.
Um, no, I was super bummed out and I was trying to think of like what would that price would have been. I will tell you probably because it's a once in a lifetime thing.
Like what's your max? Like what you would have paid for?
Yeah, I
Okay.
I I would have spent $1,000 on a ticket. That's probably the most like I mean again, if it was like um somewhere where I could see, I wasn't like nosebleeds, right? I would pay $1,000 because it's a great lineup of a lot of bands I want to see, plus Black Sabbath. $1,000. I still have to get there, and I got to stay
Hmm.
there. I got to do all that shit, right? But yeah, impossible. So anyway, that was my frustration for my my last my tickets. Anyway, so dude, we're gonna talk about credit score as one of the most exciting things in personal finance. Actually, you said it good. It was like necessary evil. What'd you call it?
Uh, I know I called it that. I think I called it several other things, but definitely that one. Um, yeah, it's yes, necessary evil, depending on your viewpoint. I think your intro though really captured it. It's just whether anybody likes it or not, they're they're the world we live in, right? That's
Yeah,
part of the world we live in. But there's a point where it's just like, okay, leave it alone. Stop worrying about it.
right, right. I
You're
mean,
fine.
exactly, exactly. So like, while they're not necessarily required, good credit can certainly impact various aspects of your life. Everything from mortgage rates to insurance premiums to finding a place to live, rental background checks. I mean, all these things can matter. I mean, I'm a
Yeah,
landlord, I own
absolutely.
property, and you have to have a credit score of 650 or higher to rent one of my properties. I mean, that's one of the requirements that I have. But I think there's a lot of other misconceptions. One that you really did point out, and we're going to go through kind of those five pillars of what's the data points that actually make up your credit score. And so I'm looking forward to kind of getting into there. So I think one thing to start really, I mean, what is a credit score? And think of it as like a financial report card that measures how responsible you are and how you handle debt. And I think it's a funny word because it determines how credit worthy you are,
Right.
which is so funny.
Right. Credit worthy. And I think if you think about it from that standpoint, as far as um, many of the things you mentioned earlier, as far as, mortgages, loans, getting a place to rent or whatnot, it is those organizations taking on a risk on you. They're betting on your ability to pay them back, right? And so because of that, the thing they want to know is how likely are you to pay me back? So it does revolve around, do you actually pay off your debts? And so I think the important thing from that aspect, you mentioned it's how responsible you are with your credit or paying back debt. It's not the same as how responsible you are with money, with your
Right, right,
overall financial picture. So you can have a really high credit score and be essentially broke
right,
because you're really, really good at paying your monthly payments, which only that all that means is you're really good at paying your monthly payments. But you
right.
can be riding that razor thin edge of something goes wrong and now you can't make those payments anymore. So being obsessed with having that really high credit score by itself doesn't necessarily mean that you have good financial health. But from a creditor's standpoint, as far as if they're going to take risk on you, if it's high, so far you've shown that you can, and so they will extend you some more credit. However, when we get to the next part that we were going to talk about is what makes up the credit score. We'll see how some of those things do make you less of a risk if you're managing that debt well.
Right. And yeah, I mean, in these days, we need some sort of mathematical representation that, and you really said something interesting that I never really thought of is that those servicers are taking a risk on you. So they need to know, well, am I going to be able to pay that back? Normally we don't look at it from their point of view.
Right.
So yeah, no, that's really good. And I think
Yeah. It's like, don't they trust me? What's going on?
I
I'm good
know,
for
right?
it.
Um, but yeah, it's different than back in the 50s and 60s where you had a relationship with a banker
Right.
and they would know you. They would
Mhm.
know how many, what your assets were at that bank, and they'd run into you at church. And they would
Right.
like give you a loan based on your character.
Yeah. Yeah. It's like,
And
oh, he's good for it.
yeah, yep,
Well, to a certain extent, I mean, we can say it that way. It's like, oh, it's based on their character, or based on the fact that they know you or whatnot. It's just like they really still knew all that stuff about your credit history. It's just that it's because they knew you, right? It's just like, oh, yeah, word got around town that this guy owes 8 people money and is not
mm,
paying them. So I'm not going to be the
right,
next person to do that, right?
sure,
But so now, so we talked before about, it being a necessary evil. And part of what that is, you know, great, it's wonderful. Don't have any credit, don't have any credit score. Sure. Okay. But the world we live in now it moves too fast and has too much going on with too many people to you could say it's sad that it's this way, but to really be able to build those relationships with everybody that will give you these access to capital, right?
mhm,
So one one big proponent of not having a credit score, we'll just talk about, for instance, with home purchases and whatnot. It's like we'll just do manual underwriting. It's like, all right, that is possible, sure, but it takes a lot longer. And when you're at a day and age when you've got houses being sold before they're even on the market,
right,
or you have 40 people who are putting in offers on it, you you don't have time for manual underwriting.
right,
You don't. So it's like, all right, I could have no credit score and do it this way, but you're going to miss out on so much opportunity because that's just not the world that we live in these days.
right, right. So, so that credit score basically has a range, right? So from like 300 to 850. And actually, this is a funny story. I don't know if I mentioned it in the podcast before, but um, I've been divorced for almost 10 years, just about 10 years. And every time I do something with my credit or I'm purchasing a new property or something, they always come back and say, "Hey, do you live at this address?" And I'm like, ah, "No, that's my ex-wife's house," because she has a credit card that I'm still on that credit card because, and I remember after like the third time this happened, I like text her. I'm like, "Hey, just FYI, like I'm still on that credit card." She's like, "Yeah, but," and she sent me a screenshot of her like 812 credit score. She doesn't want to like, because that particular credit card, she can't just remove me. Like we're there,
Right.
like
So you have
you
to close it.
have to
Yeah.
close it. And so she doesn't want to lose that high credit score. And
Mm.
so, yeah, I don't know. It'll be there probably until I die. So I don't know. Um, so this credit score is made up of like five major pillars, and the first of which, something that you already mentioned, is basically just paying those monthly payments. So 35% of your credit score is made up of making those regular payments and your payment history. So if you missed any of those payments, it can really damage your credit score.
Yeah, absolutely. And one thing to note on that for anybody who might be younger and building their credit and whatnot, communication is still key. So even in the not too distant past, for myself, who's a financial expert, quotation marks there, right? You get a credit card and you forget to set up automatic payments, and then you get the notice, be like, oh, your payment was due yesterday. Like, dang it, shoot.
Yep.
So you log into the portal, you pay it, and you send a message and be like, hey, really sorry about that. Just paid it. Could you actually waive the fee? I promise it won't happen again. Dear Mr. Hine, thanks for letting us know. We have waived that fee for you. And just it's don't and basically trying to say don't freak out if you miss the payment because of something like that. Communicate with the lender, make
Hmm.
the payment, and odds are you're gonna be fine. It's when you're like 30 days delinquent and still don't make a payment or even just make a partial payment or whatnot. So Not at all saying, hey, don't pay your credit cards. It's okay. Nope, not trying to say that.
Right.
But if it's a small thing like that, don't freak out right away. Just go in, pay the thing off, be done with it, touch base with the credit card company and just see if they waive the fee. Because odds are they probably will.
Sure. Sure. I think I talked about it on another episode too, where there was a credit card that I hadn't used in like forever, and it automatically charged like, I don't know, like 27 cents or something, and and I forgot to pay it, but it was like a $39 fee on like a 29-cent charge. So the next one, so 30% of your credit score is made up of what's called credit utilization. So this is how much of your available credit you're actually using.
Yeah, that's a fun one because it starts. So that's one of those ones where people start thinking it's counterintuitive, right?
Hmm.
I opened more credit cards and my credit score went up.
Hmm.
And basically what that is, well, yes, now you have access to more credit. And if you're not using it, that utilization percentage gets lower. So yeah, having more credit cards and more available credit can actually it boosts your score because your utilization rate goes down. And where we need to be careful is to not take out new credit cards and then max those out also.
Right.
And now we just have, well, one makes it harder to pay off if you're spending all your money and not being a good steward of it and knowing that you can pay off the credit cards. But then two, if you max it all out, then your utilization rate is going to be closer to 100% than 0%, which is going to have that negative impact.
Right. And then one thing too is that people often they're very quick to like just cancel a credit card or cancel something they're no longer using. But in all actuality, that could hurt your score because length of credit history makes
Hmm.
up about 15% of that credit score. So your age of credit does matter.
Yeah, and that's actually what you were just talking about with your ex-wife, as far
Hmm.
as not wanting to close that account because it was the older one. So something that you can do sometimes. So what people will do is if they're chasing some of those point bonuses or whatnot, and they
Hmm.
go with a credit card that has an annual fee, and it was worth it when they got the bonus, but then it's not worth it anymore. My experience has been, and I can't say that this is forever and always going to be the truth, but if you have one that has that annual fee, you can ask them to change that card to a different tier card that they have that is
Hmm.
without the annual fee. And it kind of carries through still that same credit age because they're just changing. It's like, okay,
Yep.
Chase was one I think I did that with. Oh, you have the Sapphire card, and we're going to convert that over to the Freedom Unlimited. Yeah, without it being a new account.
Yep, exactly. I did the same thing with my American Express because I opened up my first travel card with Chase, so I really wasn't going to use my American Express, and I basically demoted that from the reserve card down to the blue card,
Mhm.
so it still kept the same age, the same credit limit, all of the things, right?
Right.
Yeah, so another one too is it's interesting to think about is the credit mix. So, the creditors, they want to know how well you can manage different types of credit accounts. So this can be like an auto loan, a credit card, a personal loan. It's different than just having like three credit cards or something like that. And that adds up to about 10% factors into what determines that credit score is the mix of credit.
Right. And I think it's probably 10% because it's so weird. It's like it's like they want it to count, but it's like, but not for much. It's just 10%
Yep.
because sure. I don't know. I don't know why they have that one, but maybe if I grow up one day and own a credit reporting
Yeah, right.
company, then I can change it. But
Well, and maybe you have some insight to this one because this one always kind of confused me too because the last one is 10% factors into your credit score on how often you apply for new credit, which I don't understand. So should I always be applying for new credit or like it's kind of confusing to me on how that factor that in.
all right, I could be off base here. So I'm thinking back in the day, I worked at a car dealership, right? And so this is how often you apply for new credit, not necessarily how often you get a new credit card. So sometimes someone would come into the dealership and would not really have good credit, but they also didn't really understand what we're talking about now as far as the things that can impact your credit score.
Hmm.
So they would be going and you'd pull up you'd have to run a credit check to see if they could be given a vehicle loan, right?
Hmm.
And it's going to show recent credit history of all different kinds. And one of them would be, wow, this guy's been at 8 dealerships in the last 72 hours applying for credit. And after the first one's denied and the second one denied and the third one's denied, it's
Interesting.
denied, 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 denied. They're shopping everywhere just trying to get credit to
Right.
buy a car, right? So to a certain extent, I'm sure that's not the only part that this is referring to, but if you're just constantly going from place to place to place to try and get new credit, it's going to start setting off little bells and whistles and be like, okay, does this person not have any money? Why do they keep applying for new credit everywhere? So I think both between the keep applying for new credit to take on debt and whatnot, and then also just the desperation, like I said, with the car loan story of, it's like you don't have good credit and you just keep shopping around. It's like, matter of fact, we had one guy who we were working with a local bank, going back and forth a little bit while the guy had left to be like, well, hey,
Wow.
it's like, dude, we'll get back to you, but just, you got to give us some time to work with the bank and whatnot. Cause this was a guy who we talked to earlier, he had a very good income,
Hmm.
but he just had so much debt that
Right.
nobody wanted to give him more. So, so it's like, let's work with this local bank and see if we can get something done. Well, the problem was by the next day or two, he God's honest truth, this actually happened. He's actually calling me back and being like, so, you got a loan for me or not? Kind of like it was my fault, right? It's like, why are you guys taking so long? And so I went to the finance manager, like, hey, what can I tell this guy? And they looked at it. It's like he had gone to a handful of more dealerships since then. It
Right.
was like, I can't now. Like maybe we could have worked something for him, but now that he just refuses to just calm down and
Right. Right.
stop, it had just gotten that much worse to where even the bank we might have been able to get him a loan at was just like, no, this guy's a risk.
Sure.
It's just so
Wow.
bizarre though.
That is so crazy. Well, I think one of the things that those pillars of what makes up a good credit score and how they factor, how do they come up with that credit score?
Mhm.
There's one thing that there's kind of a misconception that you say many
Oh
people
yeah.
think utilization means something different.
Yeah. So to say it more succinctly is none of those pillars of what adds up to your credit score is carrying a balance from one billing period to the next. None of them are that. And some people think, oh, even it just carry $20 from this month to next. It's like, no. All it does is you accrue interest, even if it's a small amount, and there's no point to it. It doesn't factor into anything. So if you want to use a credit card only with what you can afford to buy, and then pay it off every month,
Mhm.
100%. So that is a big misconception of people thinking they need to carry a small balance from one month to the next, and that's just not true.
Awesome. Awesome. I'm glad you clarified that because I think people would, yeah, it's definitely a misconception there. So as we move on, talking about how there are some people out there that think we don't need a credit score, but there are times when it really can help and when having a good credit score matters. One of the first one of the first things we always think of is, well, getting a mortgage. And so the interesting thing is the difference between like a 650 and a 750 credit score could mean saving because of the difference in interest rate that you could get approved for. You could save $100,000 over a 30-year mortgage, which is
Mhm.
just crazy. So this is why, yeah, it can definitely help to have a good credit score. I think that's just crazy.
Yeah, absolutely. And I think a key there to be aware of, and this is good to think about from the debt perspective, but then
Mhm.
also from the investment perspective, right? Is it's not so much that the interest rate is a huge difference. It's the fact that it's on a large balance because it's a mortgage
Mhm.
and it's over a long period of time, right? So then when we think about, you know, to go very, very shortly into a different topic, talking about investments, right?
Mhm.
Making sure I'm not a huge proponent of you got to get the lowest fees, you got to get the lowest fees, but you also don't want to have high fees,
Mhm.
right? Because it might seem like a small amount, but over your investing career, if you will, that small amount over increasingly large sums of money over a long period of time end up being very large. So even if you could look at it, it's like, oh, it's just a 5.5% versus a 5.75%. It's like, well, yeah, but it's on a $300,000 mortgage across 30 years. So
Right.
that's, to your point, going to add up to be a lot of money.
Yeah, totally. So again, it does matter. So if you can have a high credit score to help with those things, and there's other things too. Like if you just are going, maybe you're going to rent, right? You're going to different apartments. You're going to have rental applications. Landlords use credit scores. I just talked about it earlier, and that's a big screening tool, a screening tool, and also things like employment screening, especially depending on what type of jobs that you are trying to get. They'll do a credit check. And you know
Absolutely.
what? If you have a low credit score, it could cost you from actually landing that job that you want. So that's something that you can also look at as well.
Absolutely. Any job that you're going to have be responsible for money,
Hmm.
right?
Totally.
Because they're going to want to see how responsible are you with your own money,
That's right.
and if you're not doing the right things, it's like, well, do we want you to have your hands on our business as well?
Right. And obviously one of the biggest things too is car loans. So car loans, better scores can significantly slash that car payment down. I mean, it could be the difference between even, a lower rate of like 2.9, but you know what? You have a really good credit score, you could get it for like 0.9% interest, right? I mean, it's crazy some of the deals they have out there if you qualify. And it's so great. Like those of you that are listening, if you listen to the car commercials, if you read the fine print of the car commercials, those unbeatable deals, you listen or you read down the bottom, it's like if you qualify.
Yeah, for well qualified buyers. Yes,
That's
that's
right.
exactly how they say it.
We'll have a link into the show notes, but there are just a list of things that if you have a good credit score, it will help you. Everything from emergency loan access to business loans to security clearances, tons of things. Car insurance, believe it or not. I mean, many insurers use credit-based insurance scores to determine what premiums you're going to pay. Like what? Like, man, I mean, that's crazy. So, um, but also, we always talk about like churning and burning like credit card hacks and like using rewards to travel for free and all this stuff. But credit card rewards, a lot of the premium cards with significant perks require a credit score of over like 740, which I think a lot of people don't even realize, right? So you got to be able to maintain that to get all
Right.
those perks and rewards and points and all the other things. So
But I like that you mentioned 740, not
yeah,
800,
that's right.
not 820. It's just because there does come a point when it's like, all right, you've got a good credit score. You have an outstanding credit score. It's 760. It's like,
Yeah,
okay, the difference between a 760 and an 800 on all these things you were talking about is it's not really there. So
right.
don't obsess about it, especially if it's keeping you from obsessing about things that are more important.
That's right. That's right. So lastly, we're just going to have a couple things that you could do to help boost those credit scores. And one of the big things, like we talked about, was credit utilization and trying to hit that sweet spot. What some experts say is try to keep that utilization below 30%. And if you can keep it at around 10%, it's even better. Right. So for instance, if you have let's say you have a credit card, you're just starting out, you have your credit card, you have a $10,000 credit limit, try to keep that balance below 3 grand. And even better, if you keep hovered around $1,000, that is kind of the sweet spot for credit utilization. And again, if you have many credit cards, many different types of credit, it's all encompassing, right? So how much of your credit is being utilized. And another one that can really help your credit score is this payment timing trick. And so even if you pay your balance off in full every month, try paying your credit card just before the statement clothing, just before the statement closing
I
date,
love it.
waiting for the due date. And it's interesting. I was at like a trade show and there was like a credit company and I was actually just like waiting in line to get food or whatever. And I was like just having a casual conversation with this woman that worked there. And she says, yeah, a lot of times if you actually pay like 10 days prior to the actual due date, it actually helps increase your credit score over time. Now, again, this was just anecdotal evidence. I'm not an expert, but if you rather than wait and pay it on the due date of what your statement says, and you pay it 10 days before consistently, your credit
Mhm.
score will go up. Now, that's just what someone told me. I'm going to hear all the people emailing me telling me I'm nuts, but
I'll
that's
be
what
one of them.
that's what I heard.
Yeah, that for me, let's say it's 100% accurate, right? I can say I don't do that, and I have what many would say is a very, very, very good credit score.
Mhm.
So to me, that's one of those things. It's like, okay, it's stop obsessing about something that you just don't need to obsess about,
Right.
right?
Unless they're helping somebody get, really rebuild their credit, and that would help them rebuild it from a lower amount, maybe. I don't know.
Well, sure. I don't know. I think they're So I had someone talking to me about what it once, and he needed to rebuild his credit, and someone was telling him, like, "Oh, you should get this card so it can get these rewards and then whatever." It's like, dude, you're rebuilding your credit. Don't even worry about what the awards are.
Mhm.
That's not your priority. Your
Right.
priority is paying the bill.
Right.
If you get some rewards, fine. But I mean, and to your point earlier, it's just like the really good cards are the ones you get with a really high credit score. So
Mhm.
he's probably not getting the really good ones that he wants to get a lot of cool reward points anyway for. So
Sure.
it's like, dude, use it a little bit, pay the thing off. Just do that. Make good money habits.
Right.
Right. So that's my soapbox on that one.
Right on. Well, I mean, no, I totally get it. And I think one of the last ones I just want to mention too, we mentioned it earlier, but the age of the credit, right? So keeping those old credit cards open, and even if you really don't use them that much, some people say put something small on it, like some sort of monthly subscription that you'll just continue to pay off every month, but just so you keep that old card active and you're utilizing it,
Mhm.
just something that says that it can help with making sure that your credit score goes up.
So one that I'll kind of add,
Yeah.
it's related to the timing trick. It's kind of like combining the timing trick and the utilization.
Okay.
Let's say you're starting off and you don't have a very large credit balance, right? But you've got a good income and you're being smart with your money and you're not overspending, right? Um, there's no penalty for making more than one payment a month,
That's true.
right?
Yeah.
So if you've got a $2,000 credit limit and you've got 500 bucks on there, so it's, quarter of 25%, you want to be lower,
Hmm.
just go ahead and pay that off. It's okay that it's not the end of the month. Just go ahead and make a payment on it and then keep using it the rest of the month so that utilization doesn't get overly high.
Sure.
And then, yeah, they're not going to penalize you if you make more than one payment in the month.
When I had my Amex using the app, you could actually go through your activity and just select which ones, and you could just tap the button and just pay whatever you wanted whenever you wanted, right? You could just like,
Sure.
oh, I
Okay.
want to pay this one and this one and this one, and it just, because you got hooked up to your checking account, right?
Yeah.
And so you could, like you said, you could just pay those whenever. It doesn't have to be on the due date.
Yeah.
That's cool. That's cool, man. Was this as fun as exciting as you thought it would be, Dan?
It was more fun than I thought it would be because I don't know. Like I said, I'm okay with credit cards. I'm okay with credit history. I don't mind it so bad because I realize it's the world we live in. But I do wish that there were more people would focus on how much they're putting into their savings accounts and their brokerage accounts as much as they obsess about do they have an 801 credit score or an 807 credit score. It's stop it.
Right, right.
Stop it. How much did you save this month? 4%. Stop it. Increase that.
Right, right. That's
So,
awesome. Well, I want to thank you again, Dan. It's always fun to jam. Thank you so much. And I want to thank everyone else for listening and watching on YouTube. We really do appreciate it. And please like, subscribe, and follow wherever you get your podcasts and on YouTube. Please leave a review on Apple Podcasts. We really would appreciate it. And we will see you next time on the Extreme Personal Finance Show. See ya.